Good morning, natural gas, gold, and silver traders. And today we will be looking at their support and resistance levels as well as what's the most likely scenario, which direction natural gas will be heading into next week. And we'll be looking at net gas, UNG, which is tradable ticker for natural gas, oil, which is the 2x long side for UNG, gold 2x short side for UNG, and gold and silver. All right, let's get started on net gas. So natural gas, last week I was talking about this 2.34 level needs to hold. And we tested twice, actually. We tested it right there on Friday, and we tested again this Friday. So right now we are still in a daily downtrend, as you guys can see. This initial move, this is the pivot. We're broken the prior lows, so that's a daily downtrend confirmed. Bounce. When we bounced this week, we did not break above this prior pivot high. So that means when we drop again and go below the prior low, daily downtrend is still intact for the bears. So what does the bulls need to do? Bulls need to break. This is their pivot now. This is the new pivot benchmark for you guys that you guys need to break. So that would be 2.75. So if you guys bulls can bounce above 2.75, that would negate the daily downtrend and turn it into a neutral trend. Doesn't mean we turn into an uptrend yet. If we do break 2.5, we need to set also a pivot as well and break above the highs, just like where enough drop here. They set the pivot lower than the prior high, then breaking the pivot, that changes a trend. Have a big bounce, just one move. Doesn't mean we change the trend to uptrend. We just change it back to a neutral from a downtrend. So the very first step, I want to see the bulls do, because I want to see them negate the downtrend and change the trend back to neutral. So when we looked at the price action on Friday, we asked ourselves, what is this candle and what's the most likely scenario heading into Monday next week? So we zoom in to the hourly time frame, and we can call this potentially a bear break lacking follow through, because 2.54 is a very key support, right? We're talking about the support for a while, and the bears finally broke it right there in the morning, and there's no more sellers. So it was just a initial break, and no more bears are coming in anymore, or sellers. It should have been like formed a flag retest. When it retests that level, remember when I talk about support and resistance levels, when we are prices below it, it's going to act as resistance. Prices above it, it's going to act as supports, right? So now we are below it. When we come back to it, the most ideal scenario for bears was to reject from that 2.54 and then come back down lower to 2.47. But bears couldn't do it. You can see right there, there was an initial rejection right there. See the upper wick? And bears tried to defend this 2.54 level for a rejection. But bulls played offense actually here and came back, closed the price above 2.54. So for me, this is a initial sign for a bear break lacking follow through. So when I talk about lacking follow through, we start to look at the opposite direction. So if one's direction lacks follow through, we want to start looking into the next direction. Obviously, we haven't even broken above the hourly pivot yet. So this is an hourly downtrend. Now I want to see bulls get back above this 2.6 level to negate the hourly downtrend. So we'll be back into a neutral hourly trend once we get back above this 2.606 level. Best case for me, for bulls, we bounce. Now we're back in neutral trends because we negated the hourly downtrend. Come straight to 2.621. You can see this was the prior support levels. Now it's going to act as strong resistance. Initial pullback from it, rejection, not really a rejection, but like a slight pullback, and then bounce and then break above that. And that would form a hourly uptrend as well as a as well as breaking above prior resistance back into higher ranges. This chop zone. That would be the most ideal scenario for bears. Sorry, for bulls. For you bears, the most ideal scenario you get is a Sunday gap down below this 2.54. When Sunday futures open, you get a gap down and we're back down here again, then that's the most perfect scenario for you guys. If you do get a gap down, the bulls may try to play a defense here for a double bottom and try to bounce again. 2.54. If you guys can reject that, then we are heading into 2.47. That's the bear case scenario for you guys. Bull case, obviously we want to see a gap up. So that would be the best case scenario. Natural gas usually does its thing. So we'll see which way it wants to gap. Zoom in, out. So if we do break above that 2.62 level, when we're seeing that on the hourly bounce, that'll be the best case scenario for bulls, and because we'll be back into this upper chop zone right there, where it was trading for some time there. You see, we're starting to look like forming a falling wedge here. Let's see. Let's see if we have a falling wedge. Right. It look more like a channel. Depending if we take this. Yeah, it's starting to look like a falling wedge. So we'll see. We can use this as a visual guide. Usually diagonal lines are used for visual guides for the trade. Horizontal support and resistance are more definite because these horizontal resistance support levels, everyone usually looks at the same levels, and if everyone looks at the same levels, everybody's going to be selling and buying at that spot. So that's why it's more definite for me. But for diagonal ones, I could just, some people like to draw on the wicks, some people likes to do it in the bodies. You can adjust this just a little bit. It'll just look different for everyone. So I usually use the diagonal ones for just visual guides overall. Yeah, so we have a falling wedge visual guide. So we'll see if it continues, bounce, and come back up here and it rejects again. Then we'll know it's a pretty decent visual guide. But it's already rejected so many times. You can see 1, 2, 3, 4, 5. As long as it's over 3 times, it's a valid pattern. 1, 2, 3, 4 here. See, and we did bounce off of it here as well. So I'd like to see a daily uptrend confirming from the bulls and then test here. Then we'll have a really good chance of it breaking, especially falling wedges from a weekly uptrend is more likely to break bull. See right here on a weekly trend, in a weekly uptrend still. Weekly trend is still an uptrend, right? We haven't breaking this prior pivot yet. It's in a weekly uptrend. And I talked about this last week. We're still holding the 0.5, 50% retracement. So from the bottom of this move, right? This is A, right there, bottom of the weekly move to the top of the weekly move. So this is one move, right? We have pulled back 50% of this initial move. So it just means that we pull back half of the initial move. So as long as we're above half of the initial move, it favors the bulls to bounce. But if we start pulling, like closing candles below the 50 mark, and it's starting to favor the bears on the next bounce that could potentially go lower. So that's essentially what the Fibonacci's tell us. So right now we did go under 50, but we closed above the 50. So that's still okay for the bulls at the moment. So next week, the probability should favor the bulls of a bounce here. But obviously just probabilities, but increased when we close up. So it might shape up a bounce and then we head out like that. just continuation of the weekly trend, a weekly uptrend continuing. I also talked about the monthly, right? Where monthly is still a bear flag. So we'll have to see if it plays out. But I'll just do it real quick in case there's some of you guys new here. So monthly bear flag is from the top of the move, A, to the bottom of the move, B. Bulls have only bounced not even 23% yet. You can see we haven't even get to the red line. So this is roughly like a 20% bounce to this one. So as long as bulls don't bounce over the 38.2% mark of this initial move, it's a monthly bear flag. So let's say we bounce, chop around, and break it down like that. That's a monthly bear flag confirming. Ideally, I don't think it's going to happen like that, where we break to new lows. Probability of that is not that high. Especially if we do bounce all the way up here and then make new lows, because that's like a 55% bounce. And then making a new low, it's quite, yeah, that's like another, let's just say we break a new low slightly. That's another 53% drop. The chances of that happening is really low. We're going to have the monthly bear flag in the back of our head where it could potentially, come up here and then come down because bears wants to form that monthly bear flag, but they can't get all the way down here to confirm the bear flag. You get what I mean? So we potentially like a drop, but not like all the way down here kind of drop. Let's see if it plays out, because the $2 mark is quite a strong support historically. You don't see net gas really going down that much lower. See all throughout history, right? Back all the way to 1991. We don't really see it drop below $2 that much. Maybe just slightly bit for all. So unless we get some like black swan event where there's like another war or something, but none of us can predict that, so we don't have to worry about it happening. As of now, still looking okay for the bulls. We pretty much just came back to where we were last week on the close, pretty much. So, but it was a good sign that you guys closed above 0.5 as well. So it's looking like a lack of follow through from the bears on the downside from the hourly chart, but we'll see how it goes. See on the 4 hours. 4 hours we are rejecting from the 12 EMA. See right here, reject. Yeah, we bounce. Here we will be breaking that 12 EMA as well. And on the bulls to show up on Monday to negate this break. All right, let's take a look at UNG. So UNG, very similar. This is a tradable ticker for net gas. And you see, we also bounce back above Friday's low, that same support zone. Call it 6.8. And UNG is also in a daily downtrend as well. So first step for UNG, we want to zoom into the hourly and negate the hourly downtrend back to neutral. So first thing we want to do is break above 6.96 right there, this level. I want to see the bulls bounce big enough, break above this level, an hourly chart where now they have room to form the hourly uptrend. Remember I talk about room, enough room is just, if this was just a bounce, there's no room for bulls to change the trend, because we drop just a little bit, we already pretty much give it all back. But if we have a big enough bounce where there's now room when we pull back to change the trend, then we can change the hourly trend back to the bulls. First step, I want to see a big enough bounce to break that, negate the downtrend. Now we have room for a change of hourly trend change. Do likely higher as well and retest this 7.17 mark again. We can that hourly trend back to bulls favors. It'll be the same thing as net gas testing this support zone. UNG goes well, nat gas follows NG follows nat gas. So, and we're testing this, and then we'll test that, just like natural gas would test this as well. So, your bears, obviously, same thing for nat gas. You guys want it to break down here again at 6.8 and come down to the lower range of this zone again. Your bulls definitely hold that 6.8. All right, so for Boyle, it's just we don't want to chart the leverage 3x ETFs because of the decays. So we want to just, when you play Boyle and Cold, you just want to chart UNG. If UNG goes down, like on Friday, 0.44%, oil would be down double that. So roughly, because sometimes the leverage is also skewed a little bit. So it'll be roughly down 0.88, and you can see it's down 0.76. So cold will be up because this is the short side. So you just have to buy cold, and then it'll be up double that. So just times that by 2. So depending on which side you want to play, if you want to short and you want to short 2x leverage, you just buy cold. If you want to go long side 2x leverage, you buy Boyle. Then you want to chart UNG while you're playing Boyle and cold. So if cold, if UNG breaks support, you want to be stopping out of Boyle. Wherever the price is, doesn't matter. If you want to short and this goes up, you also want to get stop out of cold because it breaks resistance on UNG. It's going to break resistance on cold. I want to chart those two. All right, let's take a look at gold. So gold broke out of my falling wedge. We've been looking at this for a while. And I was talking about this the other day where it's a very good chance where we break out of it. So the dollar, DXY, at a bear break, you can see here, this huge drop on the dollar. So the dollar correlation with gold is pretty correlated. So you want to chart them together. Well, not like chart them together, but like you want to know that back in your head, kind of how gold would do when they do break. Trying to figure out where my chart went, but okay, we'll take a look at silver first. So it's a similar chart for gold and silver. It's the same thing, falling wedge, and once we get above this, out of this falling wedge, we had that bulls coming in and buying this breakout. So usually falling wedges are a bullish if we come up from a big move. Just like net gas, see this move, this weekly move, and this is a falling wedge. So essentially, if we do break out of that, it would look the same. We'll see if net gas ends up doing the same thing. But dropping of the dollar, this move on gold and silver, same thing. So they're both correlated, gold and silver, and a dollar. So next, we are pretty much right at the next resistance level right there for silver. So we'll see if we can break above that. If we do break above that, we're going to probably test this all-time high. Not all-time highs, but pretty much this 52-week high level for me for silver. And gold, we broke out of the falling wedge, same thing right here. So next level for me would be looking at, I'll be looking at right here. This is the strong resistance zone. You can see how many times we bounce off of here. Bounce, 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 reject, reject, because prices we're underneath the price over here. Now when we come up to it, it's be a strong resistance for us to test that level. That level, then I'm looking at this roughly 210 to 2000 level, depending on the 2000 is going to be psychological level, but this 210 is 205 level. 2005 level is where most rejections are in. So this is the next level of resistance I'm looking at. Right, that's all I got for you guys on natural gas, gold, and silver. And if you subscribe, you guys made it this far, and if you guys learned anything, feel free to like, shares, and I always appreciate it. And I'll see you guys tomorrow for another update, and Monday on the stock market update. Have a great rest of you guys' weekend.